Okay, great. I hope my Excel sheet is visible.
Yes, sir.
Okay. I'm just going to run you all through the paper pattern first. I'm just going to zoom in a little so that it can be easier. The question paper will comprise of three sections, section A, B, C. A will be MCQs purely, 15 MCQs of 30 marks. B is B are going to be case studies, three case studies. Every case study will have five sub questions, 2 marks each. So that's again 30 marks. And the last two questions that are constructed response questions, 20 marks each. We have to pick one out of the four in the first one. The second case study will involve either options or they might involve calculations where there are no options to calculate it. So what exactly are we looking to go ahead and do? The syllabus is basically mapped into 6 basic topics. The first topic is going to be investment appraisal. Introduction to FM is like the first topic, rather 7, I would say. Then we move to investment appraisal. Then sources of finance plus cost of capital. This is exactly where you have the overall cost of capital theories and sources of finance, financing decisions predominantly. We then have business valuations. I normally take this up towards the extreme end because that usually helps, at least after risk management. Dividend theories plus ratios, which also is known as interpretation of financial statements from an FR perspective. And finally, working capital management, which predominantly happens to be a very big area. So this is just going to be a gist of whatever we already know. Branches of accounting, there are three: financial cost and management, if I'm not wrong. Yes, no? We have heard about these, right?
Yes, yeah.
All right. So financial accounting is past, cost accounting is present, management accounting is future tense. Because financial accounting deals with whatever you did in the last 1 year, you're doing the accounting now. Cost accounting, it talks more about the process, manufacturing, what is the raw material requirement, how much is the labor work in progress, how much do you need to achieve. So costing techniques. And management accounting basically talks about futuristic decisions, forecasting, decision making. So functions that you normally enter into is preparation of accounts, audit and tax when it is financial accounting. So ACCA does cover that. Cost accounting, we do have one subject over here, which is performance management and advanced performance management. It's a costing paper, and that's also ACCA as a qualification that covers it. But predominantly in India, it is ICWAI, formerly known as, sorry, predominantly now known as CMA, Indian CMA. And management accounting is totally about decision making. Now, financial management is an integral part of management accounting per se. And financial management will basically deal with three decisions. I am 100% sure that we have heard about these: investing, financing, and dividend. That is all that we are going to discuss in the next coming few months. So when it comes to financial management, decisions can either be short term or it can be long term. So from a short term perspective, working capital is the only chapter that we will be studying because that deals with inventory management, that deals with operating cycle, production. Whereas the other long term decisions is capital budgeting, capital structure, asset procurement, make or buy decisions, investment appraisals. So under investing decisions, majorly the syllabus will cover the why. It will answer the why. So why are project appraisals done? Financing decisions will basically give us the how. So how do I go ahead and raise finance? Equity, debt, short term, long term. How do I do it? And finally, dividend decisions will answer what if. So if I declare dividend, what would be my retained earnings? If I don't declare a dividend, how does it impact me? What will the shareholders think? So I'm 100% sure, or even if I'm not sure, I think we have seen this chart earlier. It's income statement for some people. For some people, it might be profit and loss as well, because that is exactly how it starts. So it's not sales, it should be revenue over here, but I'll use the word sales because we are familiar with the word sales. So sales minus variable gives us contribution, correct? And minus fixed costs will give us EBITDA, EBITDA. I'm sure we've seen Shark Tanks India. Have we recently seen Shark Tanks India, or in the last 1 year? Have we seen Shark Tanks India by any chance? I need you all to please be a little responsive. Thank you. Am I audible
Yes,
loud and clear? All right. So in Shark Tank's India, they must have spoken about EBITDA. That's what they call it over here. EBITDA. That basically stands for earnings before interest and taxes, depreciation and amortization. So your investing decisions will basically hover around these numbers. How much are your cash flows? And how much is your investment, whether you should invest or not. Financing decisions basically tell us what is the source of finance. So if I go with a lot of debt capital, not looking good on my capital structure, it won't look good. If I go with a lot of equity, I do not have any tax benefits. Whatever is my EBITDA, it will directly be taxed. There will not be any finance cost involved. Dividend decisions usually happen at the end. How much of dividend do I need to declare and whether I need to declare it or not. So that apparently is financial management all about. There are two goals. In the short term, every business is going to look for profit maximization. But in the long run, every company ideally should aim for something called as wealth maximization. Wealth maximization is when you are actually increasing the shareholders' wealth. Whereas profit maximization is when you are trying to maximize your returns. Any doubt with any of these two concepts? Any doubt with any of these two concepts?
No.
I don't need only one person to respond. Otherwise, I'll start asking individual questions which will not look good. Ramya Madhuri,
Yes, sir.
what is the difference between profit maximization and wealth maximization? I just explained it.
Profit maximization is a short-term strategy, and wealth maximization is a long-term strategy.
Okay.
In
So what does profit maximization focus upon and what does wealth maximization focus upon?
profit maximization primarily focuses upon the company's profits,
Mhm.
and wealth maximization focuses upon the value of the company, the entity.
That sounds about right. Thank you. That definitely sounds correct. Moving further, so when it comes to investment decisions, I need to make sure that there are some decisions that are made once in a blue moon because those are not pertaining to everyday activities. Whereas there are some decisions that are made very frequently because they pertain to everyday activities. So decisions that are to be made once in a blue moon have to be carefully made because if you do anything wrong there will be a problem. When it comes to finance, what is the source I need to raise finance from? Dividend. How much do I need to declare as dividend, whether I need to pay it or not? If I don't pay, what is the benefit? If I pay, what is the benefit? I do all of that comparison. So four parameters as far as financing decisions are concerned. We'll go with investing first. That makes more sense. So investment decision making will involve investment appraisal. Now, this is basically the first initial stage where you are appraising your projects. When I say appraising your projects, you are evaluating what exactly is the overall output, how much will you go ahead and require to be invested, and what kind of returns are you getting? Are they stable returns? Are they risk-free returns? Are they risk involved returns? Working capital management will basically talk about how much of regular capital will be required to run the machine or the asset or the project. And risk, of course, happens to be a very important parameter. So risk can be on account of foreign exchange, on account of interest rate, on account of external and internal factors in the business. And that's very important to be identified. So coming back to the theoretical aspect now, financial management function. I will try to ensure that I have the book sent today. I'm referring to Kaplan and I think there will be curated notes also that will come across in some time. But in case if there is any requirement, please highlight it. because I will be able to at least take care of it. If your sits right, it will not really help. Is the book visible?
Yes.
Yes, sir. Yes, sir.
Okay, how many terms out of these are we familiar with? I'll just zoom out a little so that we can see the entire chart in one page. Is it big enough for everyone?
Yes, we can see.
So financial management, firstly, we'll discuss the nature and purpose. That's going to end there. No further subdivision to it. Stakeholder and their objectives. I would say that stakeholder conflicts is the only theory over there. Role of management and goal congruence. That basically has agency theory, corporate governance codes, and managerial reward schemes. Three legs to that. That's important. NPOs will only deal with VFM, majorly value for money, but relationship between corporate strategy and corporate and financial objectives, that is going to be a major part. That is where your wealth maximization, profit maximization, and growth in earnings per share comes. So that leg is going to be a little important. Three decisions again: investment, finance, and dividend. This is the same diagram that we saw on the Excel. Just had copy pasted that. Money can be raised either through debt or through equity. Once the finance is received, the company can either go ahead and invest that in working capital, or the company can go ahead and invest that in non-current assets, or it can declare a dividend. Usually, dividend is not the option. But understanding of these key areas is very important. And we are going to focus, we are going to spend more of our time solving practical questions because that is what is ultimately required, firstly. Secondly, I want you all to only and only use Excel for practice, no handwritten notes because it's a computer-based exam, CB. So please make sure that, sorry, we don't really go ahead and use any pen and paper per se. Financial management is not as same as management accounting or financial accounting, although it is called as a branch of management accounting, but then management accounting basically talks about day-to-day functions, whereas financial management could be short-term as well as long-term. It's a function of management accounting though, but it's pretty much in-depth. So are these concepts asked in the exam? I would say no. They are not very regular in the exam, but these are good to know theories because it is necessary for us to understand at what stage does financial management step in. So when it comes to corporate goals, I would say expanding into new markets would be one of the focus. Second could be the return on capital employed, earnings per share, share prices, financials. And strategy wise, it could be organic or acquisition in case if we are planning to grow. For a business, again, acquire or equip new premises would be commercial. Financial would be project returns, how much is the project giving? And business decisions on a strategic level basically decide lease or buy. Operational, which is like the bottom level, they would say maintain liquidity levels because that's day-to-day operations. Financially, they will talk about cash levels and credit or cash on delivery as far as strategy is concerned. So there are three levels in the management in any company. Operational level is like the bottom level employees. Management level is the mid-level management. Corporate level or strategic level is like the top level management. So vision of the corporate level is 10 years, 15 years. Management level could be 5 years. Operational level could be within 1 year. That is what it talks about. So operational level will be very much functional. The business strategy level will be coming up with mid-sized decisions, whereas corporate strategy would talk about long-term decisions for the company. Any doubts so far? Do we have
No,
any
sir.
doubts so far, guys? Sure.
Yes,
Okay.
sir.
How many of us know what is just in time? I mean, this will be relevant for performance management, but I'm still asking. How many of you know what is JIT?
You manufacture the products once you get the order for it.
Fantastic. Mohammed, thank you so much for that. I believe restaurants are best examples of JIT. They only make the dish once they receive the order. That would be a good example. All right, let's take this question. These are the various commercial objectives or targets that I have in mind. 1, 2, 3, 4, 5, 6, 7, 8, 9. And I want you all to basically tell which of these are commercial objectives, which of these are financial objectives, and which of these are strategies. And then we have to map at what level are they, corporate, business, or operational. So let's start with the first one. Implement a JIT inventory system. Where do you think this will lie?
Operational.
Firstly, operational. Okay. So that will be commercial objective or financial objective or strategy.
Strategy.
Strategy
It might be a
Okay.
commercial objective.
might be commercial objective. So that's a close call. But let's say financial, definitely I'm damn sure we didn't say financial, and I'm happy that we didn't say financial. Increase EPS by 5% on prior year. Where exactly will this lie? Corporate, business, or operational?
Financial objective.
Financial.
Okay, that is for sure clear financial. But now which level? Corporate, business, or operational?
Corporate.
Yeah, corporate level.
Almost. Okay. Okay. I want you to make notes of whatever you're doing. Okay. So first, JIT all said some said it's a strategy at operational, some said commercial objective at operational level. EPS, we all were clear it's a financial objective at corporate level. So we'll go with that. Second is acquire a rival in a share for share purchase.
That's
Strategy.
financial. Yeah, acquirer. I will share purchase. Yeah,
Acquiring a
financial, I
rival in a
guess.
share for share purchase is a financial objective.
Guess, yeah, share
I
purchase.
think it sounds more like a strategy to me. I don't know. I mean, for me, it sounds like a strategy.
Yeah.
We'll take our partner and then we'll try and expand.
But
I
it's
don't know.
for sure corporate level. I guess
It's for sure
share for share
corporate level.
purchase.
Employees will not really go ahead and decide. Like Tata employees will not decide that money will take over tomorrow. Okay.
Yeah.
Buy 4 new cutting machines for $250,000 each.
Commercial
Ramya,
objective.
you are not audible.
Commercial.
Commercial at what level?
An operational level. Sorry,
Operation.
management level.
Business level, as
I
in.
say business level. Yeah.
Okay. Achieve returns of 15% on new manufacturing investment.
Financial.
15% returns is a financial objective. Okay, which level?
Corporate level.
Corporate.
Corporate level? Okay, if we have observed one thing, there are, wait, I'll
Level,
just
I
tell you
guess.
something. There are 9 pointers and the rubrics has 9 boxes.
Each for one.
So it is each for one. Okay. I think that was said earlier, but then I think we have already marked one box. Achieve 15% returns on new manufacturing investment. Financial for sure is what you all say.
Yes, it's
But corporate business
operational level, I guess.
operational level. Okay. Okay. Improve the ratio of current assets to current liabilities from 1.7 to 1.85.
Strategy.
But at what level?
Business level.
Business level? Okay. Reduce unsold inventory items by 12%.
Operational level. Commercial.
Operational level. Okay.
Commercial.
Commercial. Operational level, commercial objective. Okay. Update manufacturing capacity to incorporate new technology.
Operational level strategy.
Strategy.
Business level.
Business level strategy. Okay. Improve brand awareness within the UK.
That's corporate level strategy.
Corporate level strategy.
Operational
Rival
level.
in share for share purchase also was a corporate level strategy. How come they are coinciding? Achha, ठीक है. What we'll do is just make sure that it is CBO that we keep in mind. Corporate business operational. That is the first thing I want to say. And then we will name it 1, 2, 3 on the basis of this. Is that fair enough?
Sure.
Yes.
First one, what is it? JIT.
Strategy it was. And
National level.
Operational
Commercial.
level strategies. O3
Operational.
is the answer, right?
Yeah. O3.
I want you all to write O3 in that case. I will just verify, okay? There is no harm in being wrong. Make as many mistakes as possible until December. Only time when you're not supposed to make a mistake is when you're writing your exam. As simple as that. That I do not accept. Apart from that, be as wrong as you can. Increase EPS by 5%.
C2, I guess. Financial and corporate.
Financial at a corporate level, C2. Okay, right? C2 in front of that.
Yeah.
Acquire a rival for share purchase.
Financial.
So C2. But C2 is already EPS, right?
It should be strategy, I guess. Acquire
Strategy
this
at business
strategy
level.
corporate level, I guess. It's
C3. Okay.
C3.
Okay. Buy 4 new cutting machines for $250,000 each.
It's
Commercial.
business management
Business
level, I
level.
guess. Management and commercial.
So B1. This is B1 according to you all.
C1.
C1. Okay. Fine. Achieve 15% returns on new manufacturing investment.
That's business level commercial objective.
Business and commercial. So that's B1.
Yeah.
Okay. Improve debt to equity, sorry, current assets to current liabilities ratio from 1.7 to 1.85. These
O1.
Sudoku puzzles will not be part of the exam. This is just for our knowledge. Sorry.
That's operational level for commercial objective. O1.
This one is operational level commercial. O1. Okay. Reduce unsold inventory items by 12%. This one.
Operational level financial objective. O2.
O2, financial objective. Okay. Update manufacturing capacity to incorporate new technology.
Business level strategies. B3.
Business level strategy, B3. And improve brand awareness within the UK.
There'll be corporate level strategies. C1.
Or
It's
this
A1.
also. A1.
A3, sorry. My bad.
A3. The answer to this question can be found in the chapter summary. So let's go to the chapter summary. Okay, that's our rubrics. Check if we were correct on most of it. Acquiring a rival definitely was a strategy. That goes without saying. Improving brand awareness could be a commercial gig, commercial mess, and financial objective could be EPS deciding. Update manufacturing capacity will be business level. Buying machines are decided by the managers, so that's strategy. Achieve returns of 15%, that is financial objective. Inventory, current assets ratio, and JIT is all operational. How many of us got it right? How many answers did we get correct? Anyone there?
Probably 4.
For 4, yeah, 4 for me as well.
So out of 9, we got 4 right. Okay, not bad. Let's try a few more questions. Conflicts are very important to be understood because these normally are a part of section A questions. So a stakeholder group could be, stakeholders are basically not shareholders. Stakeholder means anyone who has a stake in the company, contributing stake. Internal stakeholders are company employees, directors, managers. External usually are your shareholders, customers, supplier of raw materials, your customers as well who are buying the products, finance providers and competitors, and government finally. External further are going to be government, community, pressure groups, and regulators. These are connected. Internal, connected, and external are the three categories necessary for us to remember, because they normally will ask this in the exam as a Google. They normally come up with that question always. So going forward, I think so for any business, these basically are going to be, I mean, if we get this thing done right, this is what we needed to do first. Maybe it would have helped us to get the bifurcations done correctly.